Well, I appreciate the chance to speak with you. The grain markets are, I think, to summarize, they're in a situation where if we assume normal production and normal path forward, then we get the futures prices where we're at now, especially for corn, soybeans, et cetera, or lower. You know, we're assuming normal production, no further distorting, surprising trade issues. Just assuming that we won't be surprised in any way. But you know, that hasn't been a very stable or a good assumption in the last 12 months. You know, we've had all manner of uncertainty. So I know where we're standing right now in the markets, and we'll talk about that. But I also want to talk about potential paths forward and what could change our current situation as we look at these markets. Let's start over here first. So first, to talk about weather issues, and picked out these pictures from the state of Kansas. I'm trying to figure out where that flood was, but it's like in 1951 or something. I'm not seasoned enough to know that. I was born in 56, but you have some amazing pictures of things. They probably got something like that before they built Tuttle Creek Reservoir or something like that. That's probably where those experiences came in. We have if we look at the drought monitor, it's indicating a fair amount of dryness. And this is the latest one that's come out. You can see here through major corn producing states, Iowa, Illinois, northern Missouri, where there's been a lot of damage, eastern Nebraska, good chunks of Kansas, all awfully dry. You drive along I-70 in the way here, you'll run into those areas. They look pretty lush not too long ago with rainfall, and that's changed here of late. So you do have the drought monitor showing what it is, showing this situation. In talking with, it was at a conference earlier this week, a meeting earlier this week where the person from Nebraska, Paul Fuchs, I think is his name, who shepherds the drought monitor, we were inquiring, well, what does it show? Well, it shows, it's a combination of indices and feedback from people. If you remember the old Palmer Drought Index, that's part of it. So I asked, does it show the topsoil? Is it aimed towards that, or is it aimed towards the soil profile? And he said the whole thing. So I take that as they're measuring depth of moisture as they go forward. So you've got this, but the grain markets have been more attentive to has been what's happened in the last 14 days to 30 days. And you can see these same areas here that are awfully dry. We've caught rain of late, again, in the last 2 weeks and the last month that's fallen in these areas that the market's paid attention to. Of course, last 14 days, you caught a fair amount of corn reproduction activity. You're coming right into, well, you caught tasseling pollination for corn. And you're coming into now soybean flowering reproduction. So there we stand. So at this point, we've had moisture. Markets have responded. Generally, have the opinion that, hey, we've got a great crop coming. But we have a forecast of hot, dry weather coming. So that probably could affect how corn finishes out the year. What happens with soybeans now? Soybeans probably more vulnerable just because of where they're at in their reproductive cycle. So something to keep in mind. And in looking at the world weather situation, you can see this is how we show up on a calculated soil moisture ranking profile. You can see the scale here. The greener it is, the wetter, the drier. And again, through these dry areas that we have kind of show up there, you have a lot of dryness in Canada, affecting their crops, canola, et cetera. Dryness to the south, pretty dry in Argentina, the drought they had last year hasn't completely abated. Parts of Brazil, southern Brazil, central Brazil affected. Not much dryness right now up in the Black Sea region, parts of Europe, North Africa, some, South Africa, spottiness. If anything, what has our attention nowadays is a major rainfall that's happened in China and some of their in North China Plain, some areas that could lead to them coming into the markets. I think we've got some signals of that last few days where they're starting to come in and be buyers of grain. But that's hard to quantify. Guy Allen and myself have a session where we talk about international issues. We can take that up more. That follows right after this one. I'm not sure it's a breakout session. So we can talk about that. You have some trade issues coming on in China. From what I can read, Guy, it has as much to do with an election coming up and them wanting to control food price inflation as problems. And then Australia, the East versus the West, and dry in the West, spotty there. So I thought to get right into the markets. Let's talk about the wheat. So you look at wheat markets, you have we're generally disappointed. We're generally not very happy with what's happened in wheat prices. They were up trading around 9, and this would be for the September 2023 hard red winter wheat contract. We have in our mind as a reference price the high back here in last year, tied in with what was happening in the Black Sea region, up to 1150. That didn't stay around long. We spent a lot of time around 9, heading towards 975, et cetera. And now here of late have fallen off. Closed yesterday at 733. So we're not official chartists, but it's good to know where these prices have been. And so the prices have fell yesterday to basically where they had fallen in late March, early April. So what happens today is pretty important. You know, do they go on and set new lows or not? We try to watch bids for cash bids and putting out bids for next year. So these numbers, if in the Western Kansas, Garden City, and Colby, you have bids that fallen below 7. Also in Southeast, 686, and heading back to pretty wide basis levels in 78 under, 65 under, 53 under in those areas. In the more export-oriented areas, a little stronger basis. Salina, pretty strong bid. Topeka, pretty strong bid. 1525 under, 15 under in Hutchinson. These markets have a lot of similarity. If you follow them week to week, a lot of times those prices are kind of within pennies of each other. I think when you look out to next year, our farmers are pretty good pretty good farm management, financial decision makers generally, and they'll look at one thing that they'll probably take into account would be their expectations for next year. So here's the forward contract bids for harvest 2024. 680, 715 is a range. Strongest bids, of course, in these export-oriented areas: Salina, Topeka, Hutchinson. Cost of production, if you have a fallow period in there, cost of production isn't that far below. I think Greg Ivendall, I think if Greg's in the room, there he is. That we're not; these aren't that far away from where current cost of production is. So it brings up the question of what farmers' motivations will be. If they're in an area that has moisture, come October, and it fits in their crop rotation, are they going to plant wheat? Well, if there was an 8 on that or a 9, yeah, for sure. But as prices fall, it's probably more of a question. At least they're considering it a little bit more. So I want to talk about some wheat supply demand trends. This is a August 11th WASDE report. And you kind of look for trends here. You see that the planted area, the 22-23 marketing year, 23-24, did jump higher by 4.1 million acres. The harvested area also went up but not by as much. This was a tough year in terms of harvested acres. Well, the percent acres harvested. You know, we had problems in our part of the world, et cetera. Have more problems this year. Again, so we planted, this is for all U.S. wheat, 49.8 million, harvested 37. A lot of the unharvested areas, probably in our neighborhood. So planted area up 4 million acres, harvested only at 2.4. So that gives some indication of our harvesting, of our crop problems that we've had in the hard red area. In the last report, the USDA dropped this, dropped the U.S. export number from 700 million for the 23-24 marketing year by 25 million bushels, and all 25 came out of hard red. Everything else was double. So we're struggling in hard red winter wheat exports. And there's a reason for that. We'll get to that in just a minute. Stocks to use ratio did grow some from about 31 to about 34, and with the combination of these factors, average price last year was $8.83, $7.50 this year, so a drop of $1.33. Just to show you quickly, for U.S. wheat planted and harvested, you can see that the last couple of years, our percent harvested to planted has declined to areas that we haven't seen at least since 2010. I think if you go back here farther, you'll find you do find years like that, but we're struggling weather and crop production wise here in Kansas and in other parts of the Western Corn Belt. And it's showing up in our percent harvest. Interesting to see the yields. So you've got the Kansas average yield of 32 bushels an acre, down 5 from last year. And that's on the acres harvested. And there are a lot of acres that weren't harvested, that were abandoned, that were released for crop insurance, especially in the western part of the state, problems in the central as well. So we're down. It's interesting to see where other states have been. So you've got, as you look at the hard red area, Nebraska was 45. Actually, they caught late rains, up 13. Oklahoma, down 1. Texas caught late moisture, up 5. When we get over here into the soft red area, they for our struggles over here, they caught moisture and their yields are strong. So some of what plagues hard red is some substitution for some buyers, Caribbean buyers, I understand for sure, using a fair amount of soft red in their mixes. Hard red spring, you do see some dryness up in the northern border. 45 bushel an acre in North Dakota, down 5 from the previous year, and you can see where these others came in. South Dakota suffering also 18 bushels down. Other spring wheat includes some, hard red spring and some spring white. So I want to talk about hard red, and I don't want to be over pessimistic prophet of doom. And our, Kansas wheat, if our good friends from those folks are in the room, they have strong opinions on all this, but just the raw reality of it is that production of hard red winter wheat, this top line up here, has been trending down very noticeably since about 2016, 17, 18, 19, 20, 21, 22, 23, 585, and that's all U.S. hard red winter wheat. Other classes, you do see soft red winter having increased some. Others variable, but a little bit more stable. So we've got production problems in hard red winter. At the end of this, we have time. It's interesting to talk about what the reasons are for all of that. Right now, I'll just point it out. Exports by class, if you don't have the bushels, it's hard to send them out the door. So the decline in production is one of the factors impacting hard red winter wheat exports. And with this last change, it's drop of 25 million, it put hard red below hard red spring, below white wheat, etc. Part of what's going on is wheat coming in from Europe at low prices. They're low enough in Europe, and given currency issues and parts of that world, European wheat priced low enough that it's profitable to bring it across the ocean and to use it in mills in parts of the U.S. When that happens, you tend to go down to mills on the coast. There's a mill in Michigan that's been taking in hard red winter wheat substitute out of Europe, and that's an issue that if you're a Kansas or a U.S. hard red winter wheat producer, that has your attention. You're probably pretty sensitive to that. So so the low prices that we've seen before are partly affected by the international factor of wheat coming into the U.S. to substitute for hard red. Wheat use and ending stocks. Overall, you can see that in this chart, you've got food use running very consistent over these marketing years, and this is in millions of bushels. 955 back here up to 972, 973, 972 for food. Again, very consistent. Domestic millers buying different classes and using it. You can see the export numbers when we were really strong on exports, around 1.1, 1.2 billion bushels. But since 2020, 2021, we're moving to the low side. You can see the drop off, and you see the other classes. A lot of U.S. Wheat export competitors have very poor currencies relative to the U.S. And Guy, as you and I talked about in that session, they clear the market. They really don't store much. So here we store a lot of times in elevators, and we by our practices contribute to us being, again, the old saying, the residual supplier for the world. It's because we store, and our currencies kind of are driving us toward this. So I want to talk about what could change. So in my own perspective, you've got, so here's what the USDA is projecting: $7.50, 33% stocks to use, ending stock 615. You can see some key factors there in different scenarios, and let's say 50% likelihood they're right. And you can say, well, gosh, that's not very confident. Well, there's a long ways to go. There's a lot of things that can happen. I think first one to consider is that even with the trends we're seeing in exports, that we're still too high. That this number dropped more. I basically dropped 50. You take off 50 million bushels and just rebalance the balance sheet, and then figure where prices could go. You're going from 33.5% or so stocks used to 37 plus, and it would take prices all that much stronger lower. So I think that's the biggest risk that we've got right now. And also the yield numbers. If you look at the back of these publications, they say, well, they actually give you their accuracy of their yield estimates, and they're startlingly wide. So shouldn't be surprised if in some future US WASDE report, and there's a September 1st stock summary count, small grains annual summary, that we could have variability in yield from that to that, and that's actually understating the forecast. Figure the forecast error off production, take that back over the acres, and this is how you get yields possibly changing. And you can say, well, gosh, that's pretty wide, but that's statistically there. That's their own claimed accuracy. And if that happens, especially on this, and we can't dream of that right now, but if yields fall from this to 44.6, you hold everything else, even lower exports in there, you jump into a situation where we'd strongly take prices higher. But we'll have to wait and see. If something were to happen on that, it's probably hard red spring wheat in the U.S. overall coming in a lot lower than had been anticipated. So after all that, here's kind of how prices would look to me. So this is stocks to use versus price running up into this year, and there's a strong year we've just had, 883, and here you've got this 50% likelihood of 750 with USDA projected, probably even lower, as you saw the percentages, about 40% chance of going from there, even basically below $7, and this outside chance, 1 in 10 by my own internal modeling thoughts of hey, we're really surprised, we really overestimated this and higher. So chances are sideways to lower for wheat with what we know right now. Do you want to talk about the world situation? So for world less China wheat and ending stocks, you've got stand back and look at this and you see, well, we've got growth in production, growth in usage, exports. Generally, you can see the amounts per year. By the time you put these together, you end up with a situation with world less China wheat at historically low levels. We're not really trusting the Chinese stocks figures very well. They have problems in getting accurate measures. So the contrary thoughts here is I'm saying, gosh, the wheat market looks like it's struggling. Doesn't look like there's much opportunity in the short run to go higher. Yet the world is just tight as can be for wheat supplies. So it seems like that we're about one crop or two crops away from being a way different situation, a lot more volatile than the market's getting credit for right now. I'm not saying the market is wrong, but it has an idea what it has in hand, but things are so tight that a drought in Australia, which they could have, and more problems in the Black Sea region could change this and cause a lot of variability. So then you come in and you look at the world stocks to use, world less China stocks to use, and this is just on a long-term decline. So in the short run, you're kind of bearish because of what the market sees right in front of it. But in the long run, man, this is really a tight and declining at-risk situation, very volatile. So I'd encourage you not to go to sleep on how tight the world wheat market is and how much at risk it is if the right combination of factors happen in the next 12 months. Okay. And you can see the difference between what world ending stocks and world less China. Well, this differential is basically Chinese indicated ending stocks, and there's vast differential. Let's talk about corn markets. So the corn, as I've said, right now, where are we at in the markets? Well, we're subdued. I wouldn't say we're pessimistic, but we had seen prices at around, we jumped up to 525, 550. This is on the September contract. Spent a lot of time above 5, and now came down to close at 473, more like, and traded at lows of closer to 465 thereabouts. So again, market has moved to the lower side. Had seen again last year, had gotten up to 7. So corn producers, when they were making their planning decisions, they were thinking this, and now we're at that. Now we're at the other side of that. So puts us in a more of a sober situation. The thing I would say, if you look back historically, there are a number of years where the low prices have come around September. Based on what the market's looking at, production looks like a large crop's coming, and we have seen the lows come about this time. I'm not trying to cheerlead for higher prices, but just to note that. You look at the bids, and what stands out to me most times is this Garden City bid, 573, 95 over current cash market. Their forward price bids 20 over. Next closest is Hutchinson. This would be for fall delivery. Even money at Hutchinson, 490, and again, 14 to 30 under at these other locations. So interesting as you look at where the market's at right now. It's not $4.25. Maybe that's the most positive thing I can say. It hasn't fallen to $4, but we're not anticipating any, not looking right now at anything to change this, at least until we get more information or we find out what dry conditions might do in the next month. And you look at the corn supply demand balance sheet. I think so much was put in motion when we came out of the June 30th acreage report, and this number jumped up to just about 2 million acres from 92 some to 94. And what it did, it set in motion that we could drop corn yields from 177.5 down to 175. We could drop it to 173, and we'd still be sitting down here above 2 billion bushels carry out. So we generally have a lot of corn around. So production went from last year's dry, Western Corn Belt dry number of 13.7, 15.1 billion. Again, almost 1.4 higher. You can see that the good side of having lots of bushels that are moderately priced is that you really support the usage industries. You build a demand base. So that helps cattle feeders. That helps on Glenn's enterprises that he's looking at. You see livestock feeding generally higher, anticipated to be higher this year over this year. Down a little bit in that report, mainly because of this being down 200. But on a year-to-year basis, stronger food seed industrial usage, strong overall, ethanol up, cheaper corn, exports higher because of availability, total use higher, 700 some. Ending stocks, again, over 2 billion up to 2.2. Stocks to use, 15% stocks to use, up 4% from the previous year. And market prices, 660 from 660 last year down to 490. So that's the reality of what we're seeing at the moment. And so I think overall, my takeaway on the balance sheet, supply demand, is that even with a smaller U.S. corn crop, ending stocks of 2.2 are well above where we start to worry. Where do we worry? When we get about 1.5 billion to 1.7, given this usage, we're well above. We're at 15% stocks to use, well above tighter levels at 10. So the market has information in it that is moderate. Bearish would be 2.5 to 3 billion bushels carry out. But at this time, we're setting up to where the usage industries will have a better opportunity for profitability than they had last year at these higher prices and tighter stocks. Here's kind of the story of this year. When we had the run up in prices, the percent good to excellent had fallen off but in early June. Things were looking pretty tight. We saw prices run up closer to $6 for these futures. And then rain started to come, Eastern Corn Belt and Eastern Central Corn Belt. That percent good to excellent jumped back up higher, and so the market, the prices responded accordingly. Acreage, again, we jumped that 2 million acres, set the stage for where we're at right now in terms of large production coming. The U.S. corn yield, 175.1 bushels per acre. The trend line right out the gate was 181.5. There was a USDA data users meeting earlier this year. It was in April. We had this contentious discussion. It didn't get, people weren't yelling, but there was emotion in the room that asking, well, so we plugged in the first yield of 181.5 way up there, and using a long-term trend from way down here running up in that direction. Yet we've gotten to we've had a lot of difficulty getting over 175, 176 of late. So do we have yield compression? Are we topping out? Given our genetics and breeding, we would never think that would happen, but we haven't been able to go over 170. If we'd got 177 bushels, that'd been a record. And we've been knocking on that door for a good while now. So it's my good friend, Terry Castens. Terry, this is a statistical issue. You know, is there structural change at the end of this data set? Worthy question. Kansas corn, 124, combination of irrigated and dry land, up 9 from last year. And you can see Nebraska up 15 from a year ago, Oklahoma, Texas, actually Illinois down. Iowa kind of sideways. Most of the drier effects of this year were in Missouri and parts of Illinois. North Carolina catching some. And you can see North Dakota down, surprised me for corn, South Dakota up. So you can, Wisconsin to the downside also. So you see a lot of variability. The dry conditions that came in earlier in July are thought to have affected parts of the Corn Belt. So where's this going? I understand where we're at, what we're assuming, what could fall apart. Well, this is what the USDA assumes, and let's give them the benefit of the doubt. And again, these percentages are my own thinking. And let's say, yeah, they're right. 490 per bushel. There's that 2.2 ending stocks, 15.1. And if anything, with lower prices, I would wonder about usage being all that much stronger than the USDA's projection. That has typically happened. That when we've got lower prices, that we've responded positively. So adding a percentage increases on that, and that takes you, even if you jump up in usage, you're still, and by 160 million bushels, you're still over 2 billion bushels. So you're maybe get you to 525, 540, something like that. There's the opportunity of dry weather and USDA's forecast accuracy or inaccuracy. This thing could go lower, say 2 bushels less, take 134 bushels off production, recalculate everything given this usage, and you're at 2.1, 2.2 billion, you're still above that. So it doesn't seem like there's a lot in the cards that will take corn a lot higher right now, unless we get a tremendous surprise. What surprise could that be? Well, let's do this slide first. So here you can see where we were at, and here it just seems like we're kind of destined for now to be moderate to sideways for prices. And if anything, we may be underestimating usage at this level. Take a look at the world situation. So corn producers in South America and Brazil are looking at this price for corn. They're looking at the price for soybeans. And their planting season starts about September, October, November, December. So if there's a surprise, a fly in the ointment for all this moderation to near pessimism for corn, it's that Brazil may actually believe it. You know, they may act on it and cut back their corn. And if they have problems planting it, then that'd be a factor at harvest and winter. So we'll see. It's a dynamic decision-making environment. Stocks to use again. The chart we showed for wheat, that's almost exactly the same chart as for corn, except this marketing year, this 23-24, that's counting on a large Brazilian, South American corn crop. And that may or may not be there. But right now the market sees that. It's assuming, hey, normal production. It'll be great, no problems. If that doesn't come through, if we're 20, 30 million metric tons less production, it comes through there and you're rationing usage and you're back down to there. So even after we harvest corn this fall, we're still gonna have a weather market. It's a Brazilian weather market that we'll be watching. And you can see that, again, this same differential between China and world ending stocks with China involved versus world less China. These are just shocking. How much ending stocks we claim that the world's carrying for wheat and for corn, that we wonder about whether it is true or not. If you want the full story, come to the next session and Guy will explain all that. So yeah, well, we'll try to get at, but if that number isn't real, and there's a lot of thought that either by quantity or quantity it's not, that this is more the way to view the world than the world number. Okay, grain sorghum. Take a look at grain sorghum prices. I know you all are astute market watchers, especially when we have bushels on the line. You watch this stuff, and note for grain sorghum that you look at the forward contract bids in Salina for new crop corn 470, for sorghum 485, for Topeka 460, 464 in Topeka for sorghum. Hutchinson 490 for corn, $5 for grain sorghum. And it seems like, Guy, you and I have talked about this, big issue. The Chinese have come in of late, have been buying ahead, probably for their domestic alcohol market. They make a beer type product out of that. I think it's almost spelled BIER or something. I'm not sure what they call it, but so they have tangibly come into the market. You could ask, well, is the GMO argument between the United States and Mexico showing up here? It used to be that we shipped grain sorghum in mass to Mexico. Then we shipped it over to corn. So grain sorghum is non-GMO. It could fit that need, but we'd have to dramatically expand. It doesn't seem like it's come there yet, but if it does carry through, then what's grain sorghum's role in that would be my question. Sorghum planted acres. This number jumped up 500, well, half a million acres in the acreage report that came out. Farmers, and where'd that come from? Well, some of that released wheat acres? Probably, that we destroyed that, put grain sorghum on it, got early moisture. We're looking pretty good. So that's a possibility. We have been higher than that. Grain sorghum yields, this was last year. It was a surprisingly rough year for yields in the U.S. And when I say the U.S. is mainly Texas and Kansas, for grain sorghum and so you can see what we dropped that number to this last go in the August report down to 66. It could go back to 69 again. It's a lot of variability in estimating these final numbers. And here's the change that's happened. 73 bushel per acre in the August report, up 34 bushels in Kansas from a year ago, and up 28, 52 for Oklahoma. Not as many acres in Nebraska, but up quite a bit. So it's a rebound year production-wise for sorghum. And so the USDA puts out this supply and demand balance sheet projecting next year 255 million bushels of exports. And that would be a tremendous recovery from where we're at this year, which is 100 million. So I think I hold that out as a question, whether we'll be able to attain that. And if not, then what happens? Well, then grain sorghum goes back in and does what it performs what it is. It's a competitive feed grain with corn, and we'll feed it if the margin's right. We want to handle it. We'll do other things with it domestically, run through ethanol plants. But right now we're banking on a strong recovery in sorghum exports. We'll see if that works itself out. If exports are going to happen, it's been China leading the way for sure. And what could happen for But again, I think the yield issues going back and forth, and this is understating the yield variability for their forecast. So it says 66.2. It could go 63 to 69. Statistically, it has in the past. And so whatever happens there, it would have some difference, some impact on sorghum, but sorghum operates in the sphere of corn. It's priced off of corn as a competitive situation. If we went to zero on sorghum, you'd have probably some Chinese export buyers hopping in and buying their needs, but generally prices for sorghum aren't going to go astronomical without and be just dissociated with corn unless the export thing really picks up. Okay, take a look at soybeans. So saved the best till near the end. Soybeans are standing strong, doing pretty well. Whereas these we saw for wheat and for corn, we closed at the bottom of trading ranges, etc. Here for soybeans, we come in at closed yesterday at 1336. It did drop down at one time here in early May down to 1150 for a low. We're well above that. Had traded and historically down even lower. Had traded up to 15 not too long ago. So a different market situation. Prices generally running, cash prices all running with 13 or so. There were some 14s not that long ago. Harvest prices 12.85, 12 and a half, 12.85 largely around the state. And here's the deal as I see it for soybeans. That report, the same June report came out and dropped soybean acres, 4 million acres. And so with that, whereas for corn, there's almost no way we can get below 2 billion ending stocks. For soybeans, it's going to be hard for us to stay above 250. That 4 million acres is a big deal. And farmers chose with their planters what they were going to do. So the production dropped 4.276 down to 4.205, down 70. Well, this was down 95 from 4.3 we had earlier, down 71 from the previous year. These numbers, crush and exports, are really exposing a trend change in soybeans and you could say broader U.S. agriculture. Our model in the past has been to have decent domestic crush and have export and to be kind of like the Brazilian model, to have a lot of soybean exports, to compete hand over fist with Brazil as a raw bean exporter. And Argentina is more of a well, they take soybeans, and because of domestic policies and whatever export policies, the government, they were crushers. Well, with renewable diesel trends that are happening, we're moving from the Brazil model more towards what Argentina does. We're more of a we're taking on more of a domestic processing mode, and I don't know that we'll get all the way to what could occur by California and other states domestic plans, but so you see crush in this last report increased 80 million, exports dropped, and you've got Brazil still. They had a tremendous soybean crop, strong competition. I've heard from a good colleague, Chad Hart, at Iowa State. Really, we used to think we had a 6-month window for exports. Now it's more like a 4-month window because of the strength of what's happening with Brazil. So we're changing. That brings DDGs into the livestock world. All that much more for use or exports of DDGs if we dry it out and go that route. Stocks tightening 6 to 5.8% stocks to use, ending stocks from This number was 300, dropped to 455 to 245. Yield dropped from about 52 down to this. with all my hand waving, et cetera. Oh yeah, by the way, the price, we're in a world market. The large Brazilian crop has led to prices moving lower, even with all this that's going on. So sharp reduction in planted acres. This number is down 4 in June 30th acres report, set the stage for tighter stocks to use, support for soybeans at current prices. So what we saw happening, go back to what we saw happening here for corn, we were bouncing along the bottom. For soybeans, we're moving higher. Thank you. We're in more of a situation. Well, so when Brazilian, South American farmers make their planting choices, are they going to go for corn? Or are they going to go for soybeans? So right now, prices and such, probably costs, fertilizer needs, difficulty for them to get fertilizer, probably aiming them towards soybeans. So we stand here today and say, if South America responds like we think they're going to respond, where are we going to be a year from today? Well, they're probably sideways lower on corn, be supportive for corn. The market's going to recalibrate and excuse me, that'd be higher for corn, higher, a little tighter supply demand out of them, a little less export competition, higher prices. It's going to tend to increase corn. If they slug a bunch of soybeans in and they don't have a drought, then the corn and the soybean charts probably reverse. So just bear that in mind. I know where we're at right now. How our world competitors respond is going to have a lot to do with where we end up next year. I finally said something positive. Huh?
Wheat's up 16 cents, beans are up 22 to 20.
Okay.
You're helping.
Well, that's probably more the dry weather and some export business than anything. What's corn doing, by the way?
Corn's up 6.
Okay.
If we didn't have the seed genetics we've developed in the last 25, 30 years, these numbers would really be.
I want to come back to that at the end and talk about what how come wheat's falling off? Is genetics part of that? So anyway, let's finish out here on soybeans. Again, pretty similar. All that dry weather affected the soybean ratings also, but then we came out of that, generally looking better and for the better than we were, still a little bit lower for soybeans acreage. Again, this number was 80. Well, it was 87.5 equal last year. We dropped that off, changed the balance sheet. Yields, this was 52. Now it's that, and I put in a scenario. Just what if we drop just one bushel on lower acres? Starts to pop things around. And again, so we talk about genetics. They're great, but we're not. It's wonderful we're at these levels, but we're not continuing to go higher. And I'm not trying to get in an argument with our geneticist brethren, but we're not going higher. We're not going higher. Or we haven't yet. Soybean yields, 35 bushel per acre in Kansas, up 7.5 from last year. Nebraska, a lot of irrigated beans in the east. All that much also went up 9, 58 bushels. See what happened in these areas. Note just so yield changes in Iowa, southern Minnesota, Missouri, and Indiana, Wisconsin. So just so dry weather, hot conditions could affect all that. So if I was next year, I promise I will come in and talk about a different session. And Guy, maybe we do it together on the trends in oilseed in the U.S. and overseas. We already have moved the corn supply demand balance sheet towards more of a domestically supported product with ethanol. We're in the process of moving the soybean balance sheet to a domestically supported product with what's going on with biofuels. And we're, if anything, we're kind of crowding ourselves out of the export market. And that's not necessarily bad, but it opens the door for Brazil. So here's where things could go. Soybean projected supply demand, pardon me. So just taking what the USDA said, there's that 1270 projection, 5.76. If you just drop 1 bushel off of that on these lower acres and drop production from this just to that, just 78 million bushels, and demand forces us to hold crush and exports where they're at, then you're going below 200 million down to 3.9% stocks to use. Prices jump. You know, you're on that edge, that critical edge of supply demand, where that would take you. Or if issues happen in South America, and this market year is going to start September 1 in a few weeks, and then go, there's crop production problem in South America, and we just increase exports just 100 million. You're also down that same range. So soybeans are a risky market. You know, risky not in a, there's a lot of upside potential that just kind of marginally being priced right now, it seems to me. So here you see how that looks. See where we've come to, and given the tightness of these situations, ongoing demand, there's the potential for prices to move sharply higher in coming months. For the rest of this market year, a lot's going to depend on, of course, our yields in South America. Stocks to use, again, you got this red line, it's counting on a tremendous crop in South America that's not planted yet. So that's how this marketing year works. They'll harvest that crop out into 2024. We're plugging that in. It's affecting our outlook for the future. Where we've just been has been a 10-year low in stocks to use. There's a lot riding on what comes out of South America in the red. And so just like for corn, we'll be in a weather market. But just how many of you here deal with cotton in southern Kansas? Any cotton folks? All right. Cotton in the United States, up and down, generally harvested acres trending downward in a tortured pattern. Planted down the last year, but more of a downtrend in harvested acres in cotton. Yields this year moving to the lower side. Dry conditions earlier affected them in the U.S. A Kansas number, 923 units, and up about a third or more from last year. In Kansas, we're looking better than our colleagues to the south who've suffered in terms of their production levels. It's interesting that as we sit here in Kansas, southern Kansas, with by my count, I think it's 4 gins down there, 2 in the east, 1 central, and one over by Moscow, southwest, if not another. You know, we're in a position to expand that industry, and it's interesting that our production there stands up pretty well to our neighbors right to the south, and that's where a lot of the gins are. In fact, those gins, they'll come up and they'll try to steal business from our gins. So there's not much honor among. Well, I shouldn't say that. There's a lot of honor, but boy, when it comes to getting, I've dug myself a hole. Gosh, if there's a cotton person here, I'm sorry what I just said. Honor is not the right word, but they'll go anywhere to try to keep their gins running. Okay, very good. I'll get a letter on that one. Cotton, I guess maybe the thing to pay attention to, it is such a world supply demand driven critter. We're thinking they're sideways to lower prices. That's the last set of numbers. They're not looking at this time for a big run up on in the cotton market. Okay, so closing perspectives. So it's we're sitting in a time where where market signals have generally digested rain that has come. We've moved lower in the US. We've moved lower price wise for corn, and in particular for wheat. And we're still at risk given just what dry weather could do to soybeans, holding up decently in soybeans, but generally just moderating in corn and wheat. We've moved to the low side. I think the wheat situation is what happens when you just don't have that drumbeat of export news coming all the time. You know, if you don't have new news about somebody buying wheat out of your ports, you tend to just let prices drift lower, and that's what we're doing. We're at major disadvantage currency wise. We've got the thing that's hurting us for wheat is again the U.S. poor competitive situation on the wheat side, to the degree that we now have wheat coming into the country. That's if you're a Kansas, if you're a U.S. wheat producer, that's a thought provoker. And cotton, again, there's so many world factors involved. I can't speak in such an informed manner on cotton, other than to know it's an important enterprise. And right now we're just moderate in our expectations. So I guess with that, I can take any questions. And I raised the question on breeding of wheat. Let me go see if I can go back to that. I want to lay on the table. So here I ask for questions, then I put my own question up. Okay. And ask what you all think of it. When I look at that hard red winter wheat, to it. What are the reasons you think for hard red winter wheat production moving downward? There's a number of them, I think, but what do you think is causing that? Well, the yields, the easiest thing, well, we're not getting enough genetic run-up. Well, when we get rain, we got rain in northwest Kansas, surprisingly, and we got some isolated 60, 70, 80 bushel yields on fields. So the genetic potential was there, but it is there seemingly, but the conditions have apparently been challenging enough that we haven't, a lot of years we just don't get to it. I think our expectations probably moved from 40 to 50 bushels. We're disappointed if we don't get at least that. So that's been there. Profitability of wheat, you're competing with corn in western Kansas, western central corn and other crops. So it's probably a profitability issue, largely. When you do get a good crop, you've got on wheat, you've got 50 bushels, 60, 70. Get a good crop on corn or sorghum, you're at 70, 80, 90, 100 for not too dissimilar prices. So you've got a revenue issue going on there too. So, and if Terry was still in the room, I'd say, hey, wheat right now, hard red, it's a commodity. Our wheat's no different from anybody else's wheat. Have we bred for quantity, or do we try to breed for a quality differential? That's a question. Yeah.
As part of the stagnation on corn and bean yield, having to do with the lost acres on wheat that have gone mostly to corn and beans, but not in the corn belt.
That's a good point. Again, you're coming out to the west more non-irrigated dryland. That's a good point. It's very possible. Now so I was gonna say, so it's our fault. So I was trying to make a joke back to you, but yes, we as we've come out here, we are putting corn in non-irrigated dryland, risky situations. And last year it sure got hurt this year in certain areas, depending on where it rain's falling. it looks like they're irrigated, in parts of the west, but it's a good point.
And also that like the last 5-8 years where it's not gonna have it look more stable than the previous, so that's probably genetic.
Yeah. I think the exports have fallen off because we just don't have the bushels. You know, if we had lots of extra bushels, it'd be a different deal.
I will say, the Kansas State's done a good job with genetics on wheat, and they're getting better. But it's the weather. In north central Kansas, we have good farmers. I mean, I think the whole state of Kansas has great farmers. It's just
If we've survived to this point, we're pretty good farmers.
the only reason we didn't have a total disaster was we had some good weather right at the end to finish off. Soybean double crop, we gave us some 15 bushel. And if we would have had rain and cool weather, we would have had 0.
Yeah.
And Western Kansas 0 started 0 now at April 1st. And we still have some 60 bushel wheat on wheat for them. But it's the weather. I mean, as far as I'm concerned, I think the genetics, you know, they could always be better, but I think that's in our case, in our area, it was just terrible weather.
I think that, like I said, when we did get some good weather, 60, 70, 80 bushels, but can it express itself? Any other questions?
Come on.
If this was a meeting in North Dakota, we'd be talking about the new Chevron plant that's hooked right next to the soybean processing plant that's going to be tied in with renewable for renewable biodiesel. We don't have quite as much of that here, but boy, it's a major issue in other parts of the country.
That you're looking for another question. Is USDA overstating our exports for corn?
Well, I'm going to take the coward's way out. No, there's a study that came out in the JARE recently, Glenn, that talked about, it looked at long-term, they were looking at what factors contribute to ending stocks being off. And there were two factors that caused those errors. One was, of course, production, but the other was exports. And from a long-term view, they did state that for these commodities, we tended to overstate exports. Now you'd have to go back and pull that apart for how much, but by that, objective measure, yeah, we have tended to overstate exports over time. Each week I look at the look at exports that week, what's bought ahead. Are we on pace to meet projections? And gosh, we need a lot of times we'll need 20 million bushels a week, U.S. wheat exports. We get 14. It is rare when we get 18 to 20. So we're kind of in the mode almost of habitually understating that. And if Doug Bounds is in the room, I'm in trouble already. My good friend Doug. Oh, there he is. Hey, Doug. So I don't mean to be, and that's not a NASA issue. That's a World Ag Board ERS issue. But yeah, we tend to overstate them. We have tended to statistically.
Guy has a mic here.
Yeah.
Well, and just might want to expand a bit. The USDA yield numbers in the last report was as of August 1st. And then we had a very significant range that across the Corn Belt after that. Particularly, we saw it in Iowa, Missouri, further east of here, and the market.
It saw that.
The USDA numbers and as well having weather that pretty significant that has had an impact on market activity.
Yeah, and now though, here we're coming back with dry to finish out. So it's still August 18th, and we still have to get to the end. We'll argue this out in our meeting, our next session. So.
Last call.
Well, thank you very much, folks.
Thank
I really
you.
appreciate it.